Hello and welcome to the channel. It's your boy, Mr. Steve, with some smart money news you can use. And today we're breaking down a change that's quietly affecting millions of Americans this tax season, especially anyone who sells things online, runs a side hustle, or earns extra income outside a traditional 9 to 5. You may have seen headlines saying the IRS is cracking down on online income. But what does that actually mean? Who does it apply to? And does this affect you even if you don't consider yourself a business owner? That's what we're going to break down in plain English. So, without further ado, grab that notepad and let's go. Why? Because this one could affect your wallet. Here's the core change. According to The Independent, starting this tax season, millions more Americans will receive a tax form called a 1099-K. In the past, online platforms like eBay, Etsy, and similar sites typically only sent this form if you made more than $20K in a year. That threshold, however, has now dropped. If you've earned more than $5,000 selling goods or services online, you can expect a 1099-K to arrive to your mailbox. And this isn't stopping here. The IRS plans to lower the threshold again to $2,500 in 2025 and then to $600 in 2026. Now, I know this is a massive shift for some people because online income was only underreported simply because no form showed up. But now, however, the IRS wants to make sure all income is documented and reported. Here's where things get confusing for everyday people. There is a big difference between running a side hustle or online business or selling personal items around your house. If you're running a side hustle or business, you must report all income, whether or not you receive a 1099-K. If you're self-employed, that usually goes on Schedule C, Form 1040. Also, you can deduct legitimate expenses like platform fees, shipping, and supplies. However, if you're selling personal items and you're selling items at a loss, you don't owe tax, even if you receive a 1099-K. But if you sell personal items at a profit, that profit must be reported as a capital gain on Form 8949 and Schedule D. Understanding the difference is critical and often misunderstood. Also, keep in mind, receiving a 1099-K does not automatically mean you owe money. It means the IRS now knows the transaction exists. According to CPA guidance from Brill Tax Advisors, the IRS has already begun focusing on platforms where large amounts of income went unreported. In some cases, hundreds of thousands, even millions, went unreported over several years. The IRS is now sending soft letters to taxpayers asking them to please correct discrepancies. These are not audits, however, but ignoring these letters can escalate things quickly. This enforcement is mostly about large gaps and not your occasional garage sale listings. Here's the smart money news takeaway. This change doesn't mean you're automatically audited. It does mean understanding the rules matters now, not later. If you sell online, freelance, or run a side hustle, keep records. Understand whether sales are business or personal, and don't ignore income forms. And definitely don't ignore IRS notices. Because in 2026, what's changed isn't the law, it's how closely income is currently being tracked. So there you have it. In case you missed it, the smart money news you can use. Let me know down below, does this affect you or someone you know? And as always, don't forget to like, subscribe, and turn on those notifications to stay in the know. Also, tap this playlist right here for more smart money news that may affect you and your wallet. And until next time, I've got nothing but love for you, and keep hustling.